who knows what the markets are going to do, from here in the short term or the midterm, right? But one thing we do know is what's going to happen with debt is that as long as we have the current currency regime that we have, we're going to have the inflation that you talked about, so the loss of purchasing power, and we're going to have the commensurate accretion of debt. And the problem with accreting debt over time is that debt comes with an interest cost. The more that you have to pay in servicing that debt annually, the less you have left over to do anything else. Mm-hmm. And so we're kind of on this slow timer, if you will, of having a currency that's worth less and less as the years go on, and an economy in which we'll be able to do less and less because the debt component of it, the interest on the debt component of it, is just going to keep eating more and more of what's, what comes in as tax revenues.
Welcome to the Regeneration Will Be Funded. My name is Matthew Monahan, and in this series, we're exploring the intersections of regenerative finance, technology, and our living planet. Created with Ma Earth, you can find all of our conversations and more at maearth.com. Thanks for joining us. Today's guest is Adam Taggart from Wealthion. Wealthion is a popular media channel focused on financial education. Adam does a daily video with experts around money, economics, and investing. In this conversation, we talk about the current state of the macro economy and what Adam is seeing across the landscape. We discuss the misalignment of incentives, debt levels, and policy ideas like MMT. We go into crypto and one of our key shared concerns around it. We also talk about what's it going to take to improve our current economic models to recognize social and environmental value. And finally, we discuss the importance of financial literacy and our relationship with money. This conversation was recorded in April 2023 in San Francisco. On to the show with Adam Taggart. Today we're here with Adam Taggart. Adam is the founder and CEO of Wealthion. Thank you, Adam, for being here.
It's a pleasure to be here, man.
So what is Wealthion?
Well, Wealthion is a financial media company. Essentially, its mission is to help people fund their life goals. And what I've found is that there's a massive hunger out there for what I just sort of call like financially nutritious content, information that people realize that they weren't taught in school, but has a lot of practical value, and so they'd like to, get access to it. And when you go to a number of the mainstream media, media companies in the financial media world, people feel like they're getting really underserved there. They feel like they're more kind of getting sold information because it's the information that their advertisers perhaps want, or that it's just very, superficial, like, okay, what's the soundbite that gets the most people to watch today's 4-minute segment? What we do is we bring in top experts in money, so leading economists, top Wall Street investors, research analysts, and we basically help the average person see through their eyes. We let them crawl in their brain, spend about an hour with them, and what I'm trying to do is reduce the information asymmetry that Wall Street has had a great advantage with in terms of just having a lot more information firepower, a lot more analysis available to itself. I'm trying to make more of that available to the regular person, and then when possible, connect those viewers with resources that can help them take action based upon the insights that they've heard from the experts. So that's pretty much what we do. We publish 5 to 6 videos a week. It's all free. And hopefully we're helping make people more financially literate and better educated and better able to get going and fund what they want to do in life.
Yeah. So, you've done hundreds and hundreds of interviews now. The YouTube channel is very popular. People can check it out at Wealthion, and many, many millions of views. You're talking to a wide range of experts, as you said. I'm so curious, like that much content, that much of a landscape view, bird's eye view of what's happening across our financial system. Like, what are you observing? What are you learning? What are some of the themes that are most alive for you?
Well, what's so interesting is I would say if there's a common criticism of my channel, it's that it's too bearish. Because most of the experts that are on the channel, they're not terribly optimistic about the prospects for the economy or the markets as they look forward into the second half of 2023. I started the channel 2 years ago, and in 2021, they weren't very optimistic either. We had the same
Right.
criticism against us. And then, of course, 2022 was a pretty rough year in the markets. And so, I don't screen for bullishness or bearishness. I really just screen for people who are very data-driven in their approach. And I want to hear, what they're seeing in the data. And I think if there's one thing I take away from the folks I'm talking to right now is that, those folks that are looking most closely at the fundamental data don't see it really having a great ending, again, in the remainder of this year timeframe. We'd had over a decade of QE1, QE2, TARP, TALF, Operation Twist, all these interventions that basically were designed to continue to goose the economy, artificially goose the economy. You can argue, as I have many times, that lasted is way too much for way too long. But everybody enjoyed the party.
And when you say goose and all these different acronyms, what you're really referring to is kind of printing money or injecting money into the system.
Yeah, in some shape or form, what people call stimulus, right? Which, just like it sounds, it's designed to stimulate economic growth. And again, my criticism of that, it was way too much stimulus for way too long. But again, nobody wants the party to end. Right. Everybody's super happy, opening their 401ks, watching them go up dependably year after year after year. If you were a homeowner, it was wonderful because your home prices kept going up and up and up. Then we had the global the global pandemic, and the response from the central planners was an order of magnitude that nobody could have imagined. Completely unprecedented. Trillions and trillions and trillions of dollars around the world. And it just took that deformation to an entirely new orbit, right? You can't do that forever. And there has to be some sort of, reversion to the mean at some point in time when you distort a system that dramatically. And I think that's what we're experiencing now. So sort of like they say, look, if you live above your means, at some point you're going to have to live below your means to get back into balance. I think that's where the pendulum is beginning to shift right now. We've already had a very dramatic shift in central bank policy, largely forced by inflation, right? That's been the story for the past 2 years, is that inflation has really begun to get out of control. And that finally forced the central banks from their trajectory of stimulating to now one of tightening, right? And the system is so unused to that, right? It's gotten very conditioned to the stimulus that I was talking about. It's also highly leveraged. The amount of debt that is in the system right now really is so gargantuan that you and we can talk about the numbers, but we can't really mentally wrap our brains around it. And just to give you a sense of how fast the situation with the debt, continues to move is, the global financial crisis, it was,
Like
over a decade ago.
800 billion or something was the first bailout in '08. What was it?
Oh yeah, the numbers were pretty quaint in terms of
that's cute. Still in billions.
Still in billions, but the level of federal debt that the U.S. had back then was around 9 trillion. Today, when we're talking, it's over $31 trillion. And we're now having our latest debt ceiling kabuki theater. I don't know anybody who doesn't think that it's not going to get raised at some point here. But the point is that it's all built on, our current economy is all built on this ever increasing mountain of debt. And again, that is not sustainable in the long run either, because the cost of that debt becomes bigger and bigger, no matter what the current interest rate environment is. But once interest rates start tightening, like the way that they have right now, or start hiking the way that they are right now, it becomes unstable in sort of an exponential form. And we're talking here in April of 2023. It was just last month that we had a couple of bank failures, right? And those were banks that were sort of uniquely vulnerable to a certain extent. But what triggered all of that was they couldn't survive in a higher interest rate environment like we're now in. And the Fed is continuing to hike rates as far as we know from here. By the time this airs, maybe the Fed will announce that it's paused. Right. But right now, Jerome Powell, head of the Fed, is saying that he does plan to pause at some point, but he plans to hold interest rates there through the rest of the year. There's been a lot of people that have been hoping and expecting a pivot, which in their minds they take as, oh, happy days will be here again. We'll go back to all that juicy stimulus that we had before. There's a whole bunch of reasons we can talk about if you want to, where that is problematic for the Fed to do anytime in the near future. And the longer that we hang out at this higher cost of capital, this more highly indebted economy that we have begins to really shudder and threaten to break down. And I feel pretty confident saying that if Jerome Powell does indeed pause at a 5% federal funds rate, or perhaps even higher, and holds it there for the rest of the year, at some point we're going to have something really key in the system that breaks under that, and that is probably going to force the Fed perhaps to then revert back to stimulating, because we're going to have some big crisis at that point.
Right. And what we're talking about is not just directional moves in the stock market. What we're talking about is unemployment numbers. We're talking about inflation numbers. We're talking about cost of living numbers. Like, this can have severe ramifications, and does have severe ramifications one way or another on everyday households' purchases and consumer livelihoods.
Yes. Right now, you and I are talking about the plumbing that underlies the entire economy, right? And so exactly, that's what actually drives commerce. That's what employs people. That's what enables our way of life to actually function, right? And then, of course, the stock market is a derivative of that, where it's projecting where the economy is going to go. But obviously, if the economy is going to go in the toilet, then you can project that the stock market's going to go in the toilet as well.
Sure. And it's not like financial commentators are blindsided by this dilemma that the Fed finds itself in, and haven't been forecasting this for many years, that, if a nation state accrues too much debt at too artificially low interest rates, at some point it's going to have to make some difficult decisions and trade-offs between inflation and running hot in terms of the price of goods and services, or raising rates and then having consequences of that debt becoming extremely burdensome.
So that's extremely rational. Yeah, and I agree with you. The problem is the folks that are running our system don't always think rationally, and that's for a variety of factors, one of which is just because we're humans. And our evolutionary wiring sometimes gets in our way. A key one is that if you talk to behavioral economists, and that's a really fascinating school of economics, where basically the whole foundation of that study is, you would think we would make exceptionally rational decisions around money because it's quantifiable, it's really easy to calculate, right? The reality is we tend to make exceptionally irrational decisions around money because we're human creatures. And the way in which we assess risk, the way in which our emotions sometimes cloud our decision-making, it just oftentimes, we become our own worst enemies in those worlds. And so you mentioned inflation for a second. Inflation is a terrible risk for humans to deal with, because we are wired evolutionarily to deal with the immediate threat. The crouching tiger that's baring its fangs. Are we gonna flee, or are we gonna fight it? Right? We're really good at making those type of risk assessments. If it's not visible, like if there isn't a face staring us, staring right in our eyes, if it's not immediate, like it's something that's going to happen, but we don't know exactly when it's going to be in the future, we start discounting the heck out of it. Right? Well, maybe it won't be that bad. Maybe something will happen in between that makes things better. right? Maybe somebody will come up with a solution that's going to, make the problem go away. And so we tend to heavily discount these type of risks, oftentimes that are peril, but it's, again, just sort of how we tend to roll. Also, politically, the incentives aren't there, right? The incentive is always there to inflate, right? Because by inflating, you're basically printing more money today that can be deployed today for an immediate use today. And the bad repercussions, they come tomorrow. That's somebody else's problem,
Right.
which is why almost every politician, when push comes to shove, will vote to stimulate, to inflate. And anybody who tries to run on a platform of austerity knows pretty much that's political suicide. And to a certain extent, we as a populace, we got to own up to this, right? We're always begging politicians to give us stuff for free. If a politician is promising to take something away from us, we're probably not going to vote for him, but that may be the wise thing to do.
Right.
Right.
And I guess there's two key points. I mean, the point of this conversation is not to prognosticate around the direction of the markets in some short period of time. And there's plenty of, folks that are much more sophisticated, intelligent, and that you host on your channel to go view those conversations. But I do think that, this tendency for governments to print money when push comes to shove, like this isn't just a recent phenomenon. This can be observed across nation states, globally, across history. And so it's not like this is the first rodeo we've seen. And, you don't have to understand economics to understand the consequence of that is a reduction in purchasing power. And I'm wondering if you could maybe just put into context historically, like what is the purchasing power of the US dollar now versus the past? And like, if this trend continues, what does that mean in the future?
Sure. I can't remember the exact percentage, so forgive me. I'm going to be off by a percentage point or two. But I believe since the founding of the Federal Reserve in 1913, the US dollar has lost 98% of its purchasing power. So over the past 110 years, the value of the dollar has plummeted to, a tiny fraction of what it used to be.
Yeah.
Right. And there's a famous quote that I'm forgetting, so I'll just murder it from a paraphrase standpoint. But it's, like not one man in a million can understand the process of inflation, even though it impacts all of us. And because it's sort of like a global creep, it's almost kind of like climate change, right? Receding glaciers or whatnot. You don't necessarily see the loss of your purchasing power on any given day. Although, if you talk to somebody who's lived in a country that's experienced a currency collapse.
Sure. Argentina.
I've talked to people who live there, and they, this is back in some of the hyperinflations back in the late 90s or early 2000s, you would get your paycheck and you would rush to go spend it because you knew that the currency was going to be worth less literally the next day. And if you would go to the supermarket and there was a guy with a sticker gun, and it was his job several times a day to go update the prices on the food.
Wow.
So you would want to get ahead of him so you could grab the food with the older price before he put a higher price on it.
Wow.
So it literally can happen like that. I'm not saying that that's going to happen to the US dollar anytime soon, but it can sometimes be that visible. But unless we have an episode like we've just had in this country, where we all can look at the bills that we paid this year versus last year and say, whoa, like my grocery bill's gone up by like 15% annually.
Right.
It usually isn't that immediate. And so it's just the sort of slow glacial thing that catches you over time. One thing I do want to mention, though, and I'm not trying to get too wonky, but the U.S. dollar and many other world currencies used to be physically backed by something, in most cases by gold. Silver was common as well. And famously, Richard Nixon took the U.S. off the gold standard in 1971. What that did is it broke the last amount of discipline on how many dollars could be created, right? So that made the U.S. dollar what's called a fiat currency. And basically, when you have a fiat currency, the only thing that limits how often you use the printing press is your own self-discipline. And when you have a currency like ours, which most fiat currencies are, where they are borrowed into existence. As you create more dollars, you create more debt. And that's one of the sort of, when we're who knows what the markets are going to do, from here in the short term or the midterm, right?
Right.
But one thing we do know is what's going to happen with debt is that as long as we have the current currency regime that we have, we're going to have the inflation that you talked about, so the loss of purchasing power, and we're going to have the commensurate accretion of debt. And the problem with accreting debt over time is that debt comes with an interest cost, right? So the more that you have to pay in servicing that debt annually, the less you have left over to do anything else. And so we're kind of on this slow timer, if you will, of having a currency that's worth less and less as the years go on, and an economy in which we'll be able to do less and less because the debt component of it, the interest on the debt component of it, is just going to keep eating more and more of what's, what comes in as tax revenues and what income that we make.
And on this point, I mean, I feel like there's this narrative that continues to build momentum and is sometimes framed as modern monetary theory and MMT, and it feels like it's gaining more legitimacy.
Sure.
This idea, which, forgive me for oversimplifying, but that like there is no consequence to this where we can simply print that money because nation states control money supply, and so who cares about the debt? Just print it. How would you respond to this line of thinking, and what's your general views on MMT?
I mean, at the risk of offending any fans watching this, it's magical thinking.
Yeah.
Right. Trying to keep things simply put. We live in a world of limits, right? Particularly limited resources, right? And I want to talk about the appeal of democratic socialism in just a second because I think it ties to MMT. But I mean, first and foremost, if we just print as much money as we want to pay off the debt, to service the debts, that's actually a form of debt default. It's a debt default through currency destruction versus just saying I'm not going to pay, right? But in both cases, your creditors feel stiffed, right? And they're going to stop doing business with you. So if every country around the world starts basically defaulting on its debt obligations through hyperinflating their currencies away, that's not a solution, right? That's basically the same as if every country just decided not to pay each other back, right? When I sort of talked about we have this sort of slow timer. I mean, we are to a certain extent on a timeline of defaults on the current trajectory that we're on here monetarily. Most of the main, in fact, I'd say all the major fiat currency regimes, they're all on the same road. And if we don't change the current system that we're running on, we will enter a future of default, and it'll be default by fire or ice, by inflation, or by actual debt defaults where we just can't make our debt payments anymore. I think given the way in which we're going, our leaders will probably always choose the inflation route until literally they can't anymore. And I don't know if you want to get at some point in the discussion of returning back to some sort of back currency or whatnot, but I think that's the kind of discipline it's going to take to get off of that trajectory, and probably my guess is we're not going to do it proactively. We're not going to have the foresight to say if we keep doing this, we're going to destroy everything. We're going to actually get pushed into that decision by some crisis where it's just the pain of continuing the status quo will finally get bigger than the pain of changing. And I know that there's, you've been a scholar of the whole cryptocurrency movement in a way to come up with
not two words I typically hear associated, crypto and scholar.
But the whole intent behind it was to try to come up with currencies that didn't have the flaws that I'm talking to, right? And I am not a scholar of cryptocurrencies, but I totally understand the rationale for why they were created, because smart people looked at where we were headed and said, this is not going to end well. We need a better solution. I'll leave it to smarter people than me to argue whether the current set of cryptocurrencies are indeed the better solution or not that we need. But I get the rationale behind their development. So I mentioned super briefly democratic socialism. Let me just talk about that for a second. I'm not trying to say whether it's good or it's bad. I definitely have my opinions. But when you have a monetary system like we have, the purchasing power, decreases year after year, right? So that doesn't benefit the average person.
Yeah.
When you inflate, there's something called the Cantillon Effect, which means that the benefits of that inflation go to the people who have first access to it, because you can spend those dollars at pretty much their current purchasing power, but as they get out into the system and inflate the amount of dollars in the system, then their relative value goes down. So the person,
those are the people in front of the guy with the little price sticker.
Pretty much, yeah, it's a good analogy.
The Cantillon Effect goes to them, and then the rest of us are behind him. Yeah.
That's a really good analogy. So when the central banks, the Federal Reserve, does a round of easing, QE, whatever, right? Yep. That tends to find its way into financial assets. And so who benefits from that? Well, people who own financial assets. Well, financial assets aren't evenly distributed across American households. In fact, the top 10% of households own 90% of all the financial assets.
Wow.
So
top 10% of households in the United States, I presume?
Yes, in the U.S.
own 90% of the financial assets.
Exactly. Yep. And so anybody with eyes has seen that this problem has had a wealth gap problem over the past decade or two, and one that's been accelerating, right? So when you understand how the monetary system works, you begin to realize, well, wait a minute, that wealth gap, that wealth disparity is more of a feature than a bug, right? And that's highly corrosive in the long run. That's where you end up getting, revolutions and whatnot, because people get to a point where the status quo just doesn't work for them, right? And then they go after the rich. Now, we're not necessarily there right now, but we're on that trajectory. So before you and I started filming here today, we talked about how, the younger generations they're disadvantaged financially versus the older generations compared to where the older generations were when they were at their same age.
Because who has those financial assets? It's going to be older folks as well.
Well, exactly. I mean, obviously, that makes sense that the older people are wealthier, but a boomer at age 40 was better off financially than a millennial at age 40 today in terms of what they're able to afford. Right. So we all know how much the cost of living's increased over the past decade or two in this society. And, there's a lot of people, millennials, Gen Zs and whatnot, who are basically beginning to lose faith in the American dream. They're saying, look, I'm doing everything that I've been told to do, and yet I can't afford a house, and I don't see my ability to afford a house. I want to start a family, but I don't think I can afford to. Right. Those things don't have, good endings when an increasing amount of your society begins to lose faith in the promise of living within it.
It reminds me of that meme. We'll put it on the screen, but there's, it's popular within the crypto space, at least, where the first square is my parents in their 20s, and, they're like buying a house or having kids. And like, that's, and then, me in my 20s, like sitting over a computer, buying Dogecoin, speculating on, the most obscure meme stocks, because it's just a different era.
Right. And this is where I'm going. And this is why all of a sudden super speculative meme stocks and cryptos like Dogecoin and democratic socialism makes sense, right? Which is, you have a generation that says, look, if I continue following the narrative that I've been asked to, I can see it's not going to work. So I need to get a lottery ticket. My only way into the American dream is a lottery ticket. And so if I can buy that one crypto that goes up by 2,000%, right, then maybe I have a chance of getting in. And what's terrible about that is manyfold, which is one that happens to very few people get that lottery ticket, right? So there's a lot of people that are throwing money they can't afford to lose into the speculation who are going to get burned by it, and many have, right?
Yeah.
But secondly, we are essentially teaching a generation of Americans to be speculators versus investors,
right?
And science, the history is very clear. The tenets of investing and wealth building are very clear. We're convincing people to give up on them. And understandably, I get why they are, right? But that is not serving them. It's not serving us as a culture, as a society. It's not going to end well. But those are the conditions that we're creating right now. And same for politically, right? Which is, I think at this point, most Gen Zs, most millennials, I'm going to guess that they're not in love with either party necessarily. But I think what they're increasingly feeling is like, I'm kind of getting screwed either way. And so I may as well get screwed while getting some free stuff. And I think that's the dramatic appeal of democratic social in these people. And that's a big concern that I have, which is just that the siren song of that particular political movement is going to sound increasingly sweeter and sweeter to people who are losing faith in being able to get ahead otherwise.
Yeah. So we talked a bit about crypto, and I see, a lot of the more pure, call it, or diehard crypto philosophical enthusiasts that believe that we need to recreate a whole new financial system that introduces accountability, but also disrupts all of these banking intermediaries that are contributing to some of these other politicized forces of Cantillon Effect and irrational or less than ideal for everyone decisions being made by our central banks. And, I think that's on one side. I also, am in the inquiry of climate and have surrounded myself with a lot of people in that space. And I find a completely different relationship to finance and economics more broadly in that field, which tends to be more on the liberal MMT kind of, democratic socialism ideology spectrum. And, but also, grounded in a sense of like, if we just tinker with the tenets of capitalism as they stand and say, okay, well, yeah, we can't print unlimited amounts of money, rein it in, guys, and try to keep this current system, like we won't actually have a planet to live on. Like the very basis of this musical chairs debt-based currency issuance, way that we're going about having an impact on the biosphere itself is so problematic that we need debt jubilees, and we need to throw the baby out with the bathwater and rewire the system, and we need things that are more interventionist like UBI or direct stimulus or things that might run on a democratic socialistic platform, because the problem's so severe. And if 1% or 5% of people control so much wealth, like you need to start getting more serious. I guess I'm curious how you, calibrate between the principles of, hey, there needs to be an accountability to our debt. There needs to be an understanding of, no such thing as free money and fairy tale MMT. But at the same time, you have a view and you see like the system is broken.
Right.
So curious, any reflections on all of that? Just a very easy softball question for you.
Yeah, it's a question I ask a lot of the people who come on my channel, which is, hey, thanks so much for really elaborating on the problem. Like, what would you do if we made you emperor of the world tomorrow, right? And I don't know if I necessarily have, any great answers for that. There's smarter people than I that I would trust to do that. But at the end of the day, I'm a big fan of sustainability, right? And by that I mean not just as a buzzword, but like literally, can we do this on an ongoing basis forever? Right, which you sort of hope to do if you've got a long view for your culture or your species, right? To do that, you kind of have to get away from magical thinking and that limits don't matter, right? It's interesting because there are people on the capitalistic side who they just look at the world as a series of economic functions, right? And if the price is high enough, supply will come online, right? And it's like, well, no, like you'll get a super high price for the last tuna ever fished out of the Pacific.
Right.
But once it's gone, No matter what price you're willing to pay, there's no more left, right? So you have to be realistic about that. And then obviously on the much more, I guess, socialist side, you can't just keep having debt jubilees like they don't matter. You can't just print an infinite amount of money and expect that, that's going to magically be able to print to buy the resources you want there too. So first, it's just got to sort of be based in the realism of limits. And what's interesting is there's a lot to criticize about today's version of capitalism, to the extent that I actually wouldn't even call it capitalism. I would call it sort of corporatism or a crony capital, a captured form of capitalism, where I think it's pretty hard to name an industry these days that isn't being run as a cartel, right? That isn't a few really big, dominant, entrenched players who are highly politically connected and are sort of rewriting the regulations and the rules to protect their advantage. That's not true capitalism. Like for capitalism, you need to have creative destruction. You need to have the bad ideas be able to die. Banks can't get too big to fail. And then you need to have the better, more innovative ideas, be able to replace them, right? I don't think we really have that going on here, and that's a big factor. But to try to really address the spirit of your question, I do think it's a combination. I think capitalism, and this is just one guy's opinion, but I think capitalism is one of the most successful developments of humanity, where it has brought the most wealth per capita, and I think the most sort of social stability that we've seen in an economic model to date. But it has to play within rules, right? It has to be ring fenced. You have to have protection against the tragedy of the commons, right? You can't just let companies go out and fish the last tuna out of the sea, right? You can't let them cut down the last tree. Probably something that is maybe not quite as tied into the current system as maybe I'd like to see it, is a tie to, is a great quote from Charlie Munger that if it doesn't get measured, it doesn't get moved, right? So you really want to make sure that you have your metrics, that like you're really focusing on the metrics that matter. And if at the end of the day you care about sort of social prosperity, maybe it is some sort of metric of prosperity per capita or something that you're going after. Understanding that it's not going to be evenly distributed, right? We're not going to promise that everybody is going to have the exact same amount of prosperity than everyone else, but you're going to have the opportunity to pursue it. And hopefully over time, the system is raising that bar for everybody. So yeah, I guess with those three things is make it limit-based, tap the best forms of the healthy capitalism and healthy competition and creative destruction of capitalism while protecting against the tragedy of the commons. And like with your, there's that Native American, like have the seven generations view.
Yeah.
Maybe your guiding metric there is, prosperity per capita and making sure that you're rising that over time. And maybe I'd say like a median, not an average, but a median, because the ultra wealth can really skew the averages.
Right,
so,
right.
Those crazy wealthy people that were hoovering up all the assets, maybe on an average, America still looks pretty good. But I'd probably focus maybe more on the median line item to have a truer sense of, are we really bringing, the bulk of society along with us on this journey?
Yeah, I think that's an important point. Yeah, I feel like I'm in this in-between generation where I experienced enough to be so disillusioned with the system, like kind of that revolutionary impulse of like, the whole thing is so broken, throw it all out.
Let it burn, yeah.
But at the same time, still, growing up without computers and mobile phones and seeing the digital revolution while I became an adult. But then also, like seeing a fairly functioning economic system of prosperity, even though it was built atop tremendous amount of debt and probably kicking the can, and now seeing, the other side of some of these consequences. But I guess what I wanted to say is like, I just feel like when you introduce digital connectivity to a global species, where I don't know how many, 4 billion people now connected, 5 billion people connected, and then So, I mean, that's like very transformative. And we're just still like internet, what, 25 years of scaling now? We're still just at the cusp of what digital connectivity between our species means. And then you bring money into that paradigm, which is like maybe 10 years old-ish since programmable value and Bitcoin and digitization of digital property as a construct could actually exist in a transparent, permissionless way. I feel like the profundity of separating programmable value, i.e. money, from purely being a nation state power and giving humans the ability to coordinate now through digital tools with a more democratic open market of tokens is going to unleash so many interesting experiments and so many interesting ways of coordination that will at least have an opportunity space to say, you know, there's corporations and there's the corporate form and that's given us whatever, and there's governments and that's given us, and God bless them both, but we now have other ways of doing this. And yeah, I don't know if it's just a function of the particular generation I'm in, but I can't help but feel like that's the most exciting game in town, even though it's wildly speculative and full of noise and so many problems. And yeah, please comment.
Yeah, no, well, I agree with you. In this area, you're much more the expert.
I'm a scholar, apparently.
You are a scholar, but no, and look, there's tremendous opportunity that can be unleashed here. And while we're talking about, I talked about sort of this slow burn of the inevitable kind of long-term default route that we're on, right? I'm not trying to say that we're condemned to it, and I'm certainly not trying to say that there's not a lot of really great opportunity, to come up with solutions that may actually, open the door to a much better future for us all. You probably know these stats better than I, but I mean, some ridiculous amount of the world is still unbanked, right? People just don't have access to money, right? There's some great work I've been exposed to from scholars who are looking at ways to create like a labor-based currency. So to your point, you can take the purview of money creation out of the hands of the central banks and the banks, right? And perhaps give it to people themselves. So there's, it can be super exciting. And I wish I were smart enough and well-versed enough to have a really good conversation with you about this part. But I've got to, as a guy kind of in midlife here, I've got to hold a lot of optimism for what may come out of that. Right now, I mean, there'll certainly be a chapter of the story where the empire strikes back, right? Where these guys, these nation states, aren't going to give up their monopoly on money creation anytime soon. But as long as it's a democratization. Look, to my earlier points, like, I'm all for the demonstrated benefits of capitalistic competition, right? Which is, I'm for letting, 1,000 currencies bloom, and let's let the market determine over time which ones have value, and they can coexist, right? There's no reason why we can't have different currencies in different situations, right? So, again, I'm not going to hold my breath and say that, we're all going to hold kumbaya and get to this, happy place tomorrow. But, I have a lot of respect for the pioneers that are out there that are trying to figure out, what might be possible in this space. My one thing that I struggle with, which is, let's take Bitcoin, for example, right? Let's just assume for a second that is the solution, right? What percentage of the Bitcoin float is owned by whales? It's some tremendous amount.
Yeah,
right?
I mean the Gini coefficient, the measure of the wealth inequality for both Bitcoin and Ethereum is very sobering. It's like something like 1% of holders is 98% of coins or something. I mean, it's pretty outrageous.
Yeah, and that's my concern is I wouldn't want to see us replace or push people into another solution that may be better functionality wise in other areas, but still is another system that's already got its own massive elites that control the vast majority of the wealth.
Totally. Yeah, I think that, I mean, to me, that is, so I guess I'll out myself as more of an Ethereum maxi, and I'm not hugely a fan of Bitcoin, and with all the respect to the innovation itself and what it's birthed in the space and everything else. But in terms of just my personal view on the actual security and economics and kind of likelihood that it can continue to scale and sustain from a technical perspective, I'm just less optimistic and less excited about it. Whereas one of the important characteristics that Ethereum introduces is the ability to create new tokens on top of that, on that base layer. And I do think that as we solve for reputation and identity on Web3, being able to solve all these fraud issues of understanding this is a real person and this is who they say they are and there's only one of them, that unleashes the experiment space for UBI, like the ability to more openly and evenly distribute new tokens. And I think it will be both a growth tactic where I think the adoption curve of Web3 is going to be stunning, because at some point people are going to, Web2 spread partly because like you could share with all of your contacts in your phone.
Right.
Web3, I think it's going to be like, well, why wouldn't I want to go get 1,000 free tokens of this particular app for using it? And once that flywheel gets kind of refined by the founders and the entrepreneurs and the investors behind these companies, like it's going to be quite dramatic, because it has a network effect with everyone else on that shared ledger and system. So now you can kind of introduce, user-owned services, whether it would be the equivalent of Uber or Airbnb or wireless networks or all, like who knows the possibility set. But I think the core point being that what we have is at least now a layer one blockchain, Ethereum and others, where you can create your tokens that can at least introduce other forms of distribution of the tokens, of the value. And the trend line that when I bring up this issue about Gini coefficient as pretty much my number one concern as well, I think the response I hear that's most compelling is, well, you got to look at that trend line over time. Of course, when something's a nascent technology, it's going to start off fairly concentrated. But the trend line over time, one hopes and one sees that ETH is being dispersed more broadly. Now, we'll see if that continues with kind of the recent, without going super into the technical details here, proof of stake, system upgrades. And what ETH is trying to achieve is kind of a unique platypus of an asset where it's trying to be both a unit of account and a store of value and a means of exchange, and to kind of do all those things. And that's very unproven. I mean, I think a lot of people are skeptical of its ability to be all three. I actually think it's going to be successful. And I think that we will probably start to see in the next 3 to 5 years much more of an awareness that what has been built in Ethereum in particular is quite profound. But who knows? And any guess is as good as mine.
Hey, well, look, I'm all for it. Like I said, right? I mean, literally, the more options we have out there, the more innovation, the more competition, the more I think everybody wins in the long run.
Thank you for entertaining me and being willing to go on a little crypto tangent there. But I want to get back to what I felt like you were alluding to around incentives and measurements. And if I'm understanding you correctly, what you're saying is, well, yeah, if I was emperor, ideally we would, plan for 7 generations, have a long range view, and include kind of these tenets of capitalism, markets, not the cartel corporatism that we currently see, and we would include social and environmental objectives and measure them and create incentives so that we're thinking about the real prosperity of future generations. Do I have that?
Yeah, no, I think that's very accurate. The importance is in getting those metrics right. So again, before we hopped on here, we were talking about the challenges in measuring ESG, and there's a lot of, I think, very valid criticism that's been levied against that movement. And look, I think to a certain extent, everybody loves the environment, right? Nobody is for polluted rivers or deforested, forests or any of that stuff. It's one thing to sort of, have a heart-driven goal, but imperfectly pursue it, and perhaps have unintended consequences that make the cure worse than the disease. And it's another thing to get really smart and surgical and align incentives and actually drive towards the outcomes that you want, right? And so the example I was telling you earlier was I talked to an institutional investor who had an ESG mandate to how he allocated capital in his portfolio. He had to have a certain percentage in quote unquote ESG. And he was getting compensated on this, so he was very motivated to follow the edict, and basically just said, yeah, every quarter I just buy more Tesla. And he said, I think it's stupidly valued, and I have way more than I should, but there's just not that many other, not many companies out there that have the market value that Tesla does that can absorb the amount of dollars I have to put in here. So I just keep buying more. Now that's a decision that doesn't serve anybody, right? It doesn't serve markets that are looking for, price discovery, right? He's distorting the price upwards with these big purchases. It doesn't serve his investors because he's putting his money in a company that he doesn't necessarily think is a good value. He just has basically a mandate gun to his head that says you have to allocate capital this way, and he's just following it, right? That's not a good example. So I think we need, capitalism basically, when it works well, right? When the free market works well, capitalism just wants to know what the rules are. It's almost to a certain extent impartial of what the actual rules themselves are. It just wants certainty, right? And once it knows what they are, then it can figure out how to work within there, right? So I think that really is the role of regulation in government, is to try to sort of define the parameters of the playing field, play the role as ref, right? So if somebody's going off sides or whatever, you come in and you catch them and give them the yellow card or the red card or whatever. But otherwise, just get out of the way, right? And if you've designed the system right, we have a very effective tool for pursuing it. I don't think we necessarily need to come up with a whole new way of governance necessarily. We just need to get the mechanisms of government that have worked well over the past, or governance that have worked well in the past, get them aligned right. And, I don't know if you said this, but sort of intimated in your question is we've let a lot of short-sightedness drive the boat, and a lot of, to a certain extent, kind of political posturing, where a lot of what's being done right now about ESG or, maybe some of their social programs and whatnot, they're being embraced by our legislators because they're effective to get reelected on. And so they get elected on a platform, but in terms of actually turning that into a set of rules, designed to achieve a particular surgical outcome in the future, there's not a lot of thought going into it. It's just, hey, we want more of this, and you end up getting that Tesla example I talked about, right? We want more, quote, ESG.
So can we linger on that? Because I guess the counter argument would be, well, by having a shortage of options, it encourages the market to create more companies that fit that ESG category. And some would argue that, well, car manufacturers have failed to transform from fossil fuels to electric over the past however many decades. And so, like giving Tesla some subsidies and a kickstart and some ESG love has helped to usher in an electric car revolution that is helping to make our grid more sustainable and independent. And what's the problem, Adam?
Oh, I don't have a problem with aligning incentives. Right. Hopefully that's one of the things you take from my answer here, right? Which is, once you get real specific about what outcome you're trying to achieve, and again, this is where I think we probably fall down the most, is specificity of outcome. Once you've really defined the goal that you want, then you ask yourself, okay, great, what are incentives we can put in place to kind of grease the skids to get industry to want to go in the direction that we want them to go into, right? And if you if you provide the right incentives, like I said, that's where capitalism will go, where it can create value that it gets compensated for, right? And if there are big barriers there, like R&D, or hey, we need a certain amount of infrastructure before I'm willing to commit X amount of capital to this as a company, that's where government can play a role, right? Which is reducing those costs, creating those incentives that act as the magnet to pull the engine of commerce in that direction. But I think that, again, it's setting the incentives when you get too involved in saying, oh, I need to either reward company X, or I need to mandate general policy Y. If it's not intelligently tied to where you're trying to go, it often creates more deformation than it helps.
Totally. And that's certainly what we're seeing in examples of the carbon and climate space as well, where well-intentioned, but the incentive misalignments that result from some of these regulations can actually result in a more degraded ecological state.
Yeah, and here's kind of an issue I don't really know how to deal with, but or what the solution is, but we were talking again before we started filming about sort of financial literacy.
Yeah.
And maybe at the beginning of this interview, I mentioned that, we don't teach it in schools, right? The average degree of financial literacy of our Congress people is shockingly low. And oftentimes, they're creating policies that are going to determine how trillions of dollars are going to be borrowed and spent, right? I mean, $1 trillion is so big, man. You're a really smart guy. I'm pretty sure you really can't wrap your brain around the magnitude of what $1 trillion is. It's so big that it really defies understanding in the human brain. And yet, we have politicians that just will argue for multi-trillion-dollar spending packages, right? They have no idea what the knock-on effects of that are going to be. And so I do believe that we do need to have more sound economic and financial literacy in our decision makers.
Right.
And look, I'm not holding up the Fed or the folks at the Treasury as necessarily the best brain trust on Capitol Hill either. But at least they've got a better grasp on, all right, if we pull lever X, with money, with the spending, which is pretty much the main form of power and how power gets exercised in government. What is likely to happen, right? So we have a lot of levers that get pulled that send money flows in all sorts of gargantuan money flows in all sorts of different directions without really understanding what all the knock-on effects are going to be. In a lot of cases, they just end up making things worse.
Right.
Really good example. We had this massive stimulus in result to the pandemic. Retrospect, issued way more than we should have. We got way more inflation than we wanted, right? And then what does the populace ask for? Hey, we're having trouble paying our bills. Can we get some stimulus checks in the mail? Or, California has had, gas checks that they sent out, which just actually ends up creating more inflation. It just makes it's more of the same problem, right? But we have a populace that doesn't really fully understand, because understandably, they're just trying to put food on the table tomorrow, right? But they're asking for more of the same problem. And for the decision makers, in most cases, they want to give it to them because it's something that they can tout the next time that they're up for re-election, which is that, hey, I was the one who was giving you the free gas cards or whatever, right? So there's just there's an awful lot of the decision making that goes on that is made with far too either ignorant or short-term perspective that are creating more and more long-term problems for us. And again, in many cases, not only do the politicians are not aware of this, but the few that might be, they just say, that's somebody else's problem. I'll be out of office by then. When those chickens come home to roost, someone else have to figure it out. So there's this, there's just this sort of chronic condition we have of misinformed decision making and can kicking out into the future to put the onus on somebody else.
Yeah. Okay, well, you're not making me too optimistic about our financial system, but I guess we've covered a bit of the macro landscape and where we're at, and the misalignment and alignments of incentives and you've let me riff on crypto a bit and the need for financial literacy at the highest levels of decision making. Certainly, I want to shift a bit into our relationship with money.
Sure.
And what are you seeing in terms of your audience at Wealthion and maybe your own experiences in this realm? Like, what can be observed about people's relationship with money and how it affects their daily lives?
Great. I think I might have mentioned this a little bit earlier, but it's really important to reinforce, which is especially for the younger generations, Gen Z and the millennials, but to a good extent to my own Gen X. I think people are beginning to feel sort of increasingly betrayed by their relationship with money, which is, look, I'm doing everything that society is telling me to do, right? I'm working hard, I'm trying to save, I'm trying to invest, and yet that brass ring I was told I would catch if I did all these things is getting further away from me, not closer, right? So we have a massive affordability crisis in this country, and I think that is a big danger. Where I mentioned earlier, when people begin to kind of begin to give up on the dream that society is promising them, only bad things happen from that. So with that kind of as a general backdrop, people feel on average like. It's almost like being handed a weapon without knowing how to use it responsibly. You just you have this sense of like, oh my God, I shouldn't be holding this thing, right? Where people are they feel very insecure about being the captain of their own wealth because they haven't been taught well. And what's so interesting is, I would say a good chunk of my audience are professionals. These are people who are engineers, they're doctors, they're lawyers. In some cases, they are corporate managers who manage large budgets, millions of dollars of budgets, and yet they feel very insecure about handling their own personal money. So there's a really big craving, I think, amongst the general society right now for how do I be a better steward of the wealth that I'm creating here, right? And in my mind, what I've tried to do is deliver two things that I think most people will benefit from. One is just better education, right? So I'm doing my little part through Wealthion, but certainly anything that people can do to increase their general level of education, reading some of the classics, Benjamin Graham, The Intelligent Investor, that type of stuff. Just, talking to successful entrepreneurs or successful wealth builders in your own life and hearing their stories, right? Reading great books like The Millionaire Next Door, which is a book written by two PhDs who interviewed a bunch of self-made millionaires. This was back in the 90s when $1 million actually was worth a lot more than it is today. But you'll find that there's a lot of commonalities in successful wealth builders. And it's not too unlike getting into shape, like becoming fit, right? Like the science behind it isn't all that tough, right? You want to eat more responsibly and you want to move more, right? A little more complicated than that, but that's the gist of it at the end of the day.
Sure.
But it's the commitment and the discipline and to know how to, use good form in your pursuit that really is what brings the magic, right? So that's number one. Number two is building a good team. So just like anything in life, I go back to fitness, right? Like if you don't know how to do a deadlift correctly, right? You're much better off going to a coach and being instructed on how to do it and have a coach there to kind of, build a program for you and watch you and correct your form and whatnot, than just to pick up a bar and try to figure it out on your own, right? You'll probably end up getting hurt that way. Same thing's very true or directly applicable in the financial world. And there are people out there who, their whole professional reason for being is to be an expert in elements of wealth building. So a good financial advisor, right? So once you start investing your money, somebody who can help you figure out how to put that to work in a way where your money will grow and start to work for you over time. But a great tax accountant, a great insurance specialist, a great estate planner. Most people don't really have any resources in these cases, or if they do, they have one that they just sort of fell into, right? Somebody who handed them a business card at a cocktail party, or word of mouth or whatnot. Not that word of mouth isn't necessarily bad, but having a really good team will, can transform your progress. In other words, it can, in some cases, save you decades in terms of getting to where you want to go in life sooner. And one good example of this, and I'll pause, is an accountant. So the American tax code is something like 75,000 pages or something like that. And it's basically, the code basically does three things. It says pretty much anything you earn is taxable, and pretty much any expense you have isn't deductible, except, and then here come the remaining 76,000 pages, right? So that it's really just a recipe for helping you learn how to reduce your tax footprint, right? But it's so dense and confusing that the average American doesn't go through it. And but if you look at it as a playbook, it actually tells you a lot of things that you can be doing that will reduce your taxes. And in many cases, there's a lot of investments that if you invest in them, you can do things like accelerate the depreciation. And some investments, you can depreciate the cost of your year one investment all in that first year. So you basically get an asset plus a massive tax deduction. These things are pretty amazing, but most people don't know about this stuff. So if you have an accountant who looks at the tax code as a playbook like that, if you sit down with them at the end of the year, they can't do much for you. They say, well, look, the year's kind of over. Yeah, I can fill out your taxes for you. I can report what happened, right? But that's about all I can do. If you sit down with them at the beginning of the year, they say, well, Matthew, look, these are all the things that you could be doing with your money that are going to help me, your accountant, bring your taxes way down, maybe even get you some new assets in the process. That's what I'm sort of talking about when you're trying to recruit a team that can help catalyze your progression towards wealth preservation. But most people, don't know that these opportunities exist, don't know who to go to in terms of finding a really good qualified coach, and again, don't necessarily know the benefit that these folks can offer, so they're not even thinking about this right now.
Yeah, well, it sounds like Wealthion is providing an invaluable service in terms of financial literacy and gateways into practical actions for this time we live in where there's a broken financial system, and yet universally we all have to kind of engage with these tools of money, and it means so much to our daily lives in terms of our well-being and our family's well-being. So appreciative that you're doing this work. Are there any other thoughts, reflections, comments you'd like to leave us with, or messages for the audience?
First off, thank you for the kind words. Wealthion is just one of many resources out there that are hopefully trying to help people have a better tomorrow. But we are all figuring this all out together. If you feel overwhelmed at all by either some of the things that we talked about in this interview, or just listening to the local, the nightly business news and not fully understanding what's going on when people are talking about what's happening with currencies or in the market or whatnot, don't worry, you're in a very big boat with a lot of other people. And while it might sometimes sound scary or demoralizing, and it can be, just like they say, you go to war with the army you have, not with the army you wish you did, right? Like, this is just the world that we're in. We're in this cycle right now. Economically, things happen in cycles. Societally, things happen in cycles. I don't know if you're familiar with Neil Howe's work of the fourth turning, right?
Sure.
And that's a whole other discussion we could get into here. I won't go into it for purposes of brevity. But we are currently in a fourth turning right now, which is sort of like the winter cycle, right, of society. And you could get real frustrated and say, "Well, why was I born when I was born, and I've got to live through the tough part? I'd much rather live through the spring and the summer." It doesn't matter. You're crying over spilt milk there. This is just the times in which we're in, and there will always be challenges and opportunities to no matter which cycle we're in. The important thing is just to get educated and to understand, okay, what is the environment we're in, and what are the strategies that are going to help me get through this best from a survival standpoint and then from a thriving standpoint. And the great news, as history has shown through previous turnings, is in every single turning, there's challenge and there's opportunity. What really separates those who benefit from those who don't are the ones that are aware, proactive, engaged, and are working to become smarter and then to apply those insights for their benefit. And that's really my number one recommendation to folks, which is, if you're watching this video right now, you're already part of the crew that's curious-minded and trying to self-educate. So congratulations, you're already halfway there. The second, part now is all about how are you going to apply this information. And as I've hopefully given some, nod to in this conversation, there's a number of resources that are out there. Look, come by Wealthion if we can be of help. But if not, the internet with a couple of, key queries can get you on the right direction. The important thing is just take action. Go back to my fitness analogy. It's the commitment and the discipline that's going to really determine your destiny here. Remain committed, be disciplined.
Adam Taggart, thanks for being with us. Appreciate it.
It's been a pleasure.
All right, let us know what you thought of that discussion with Adam. Leave us a comment below. Check out wealthion.com for more information, as well as their YouTube channel. There's links in the show notes, and you can find more conversations like this one at maearth.com. Thanks, and I'll see you next time.